Well, good morning or good afternoon to everyone, depending on what part of the country you are calling in from. My name is Ginger Bell, and I would like to welcome you to the Finance of America Wholesale Mortgage, completing the 203 Maximum Mortgage Worksheet. Today I have with me William Brown, who is the Director of Renovation and Construction Lending for Finance of America. Our goal today is to provide you with information and instructions on how to fill out the 203K Maximum Mortgage Worksheet. So before we get started, I'm going to go through a couple housekeeping issues. First of all, we have several people attending this webinar, and we're glad you're on this, but we do not have audio capability, so that way you can hear us and learn, but you can ask questions. For you to listen, you can listen two ways. Either you can call in, and that's the phone number that's listed on your email or on your screen, or you can just listen through your computer. We do have everyone muted, so if you would like to ask questions, you can do that by typing your question into the question box that's marked Q&A or the chat box. Both of them will get your questions to us, and we'll be looking at those throughout the webinar. I'll be monitoring those, and if we're seeing something that comes up on a particular area, then I'll interject that so William can address that. Otherwise, we'll leave those to the end as well. I want to remind everyone that we have had a series of webinars on the 203K, and those are all available in the FAMU Resource Center. So let's go ahead and check our audio and make sure that you all can hear me, and it's not just me having a conversation with myself. And so if you can type either in the Q&A box or the chat box, let me know what part of the country you're calling in from, and let me know how your weather is. I always like to talk about the weather. I'm in the Pacific Northwest, which we've been having a heat wave, but a little bit of a reprieve for the next couple days. We're going to be down to 80, which will be great. And hopefully the weather is great there. Jeff, Westlake, California, hot. Yeah, I'm going to be down in Westlake, actually Beverly Hills, and then in San Diego next week. So it's going to be hot. I'm planning on that. Hot and humid in California. That's unusual. So, okay, so you all can hear me. You know how to ask questions. I am going to send the link that we're going through with the Maximum Mortgage Worksheet out to you on an email tomorrow, so you'll have access to that. And then it's also available in the FAMU Resource Center under the 203K certification. Our next webinar in our series coming up, focusing on FHA, is next week on July 25th, and I'll be doing a webinar on building your FHA expertise, what you can do for educating, marketing, and building your FHA business. So you can register for all webinars at www.famuevents.com. So we do not have the link in the chat box. I will be sending that to you tomorrow, but all information is available on FAMU. And so I'd like to introduce you to William Brown. As I said, William is the Director of Renovation and Construction Lending Division for Finance of America. And I remember, William, the first time I met you a couple years ago, and that was at a Finance of America event, and I was so impressed with your expertise. I know you've been doing this for a long time, and your insight, your passion, your knowledge about renovation lending, and specifically the 203K, is fantastic. And so I'm excited to have you on the call today. So thanks for joining us.
Thank you.
So before I turn it over to William, I want to let you know this webinar is focused on completing the Maximum Mortgage Worksheet. We've been doing a series of webinars on the renovation loan, and through those webinars, we've been seeing a lot of questions from you all saying, okay, how do I do this? Where do I fill this out? Where do these fees come from? And so that's why we decided to do this. And I want to start with, William, what is the Maximum Mortgage Worksheet?
So that's an FHA form. Hi, everybody. It's an FHA form, and it's designed to calculate the loan amount on renovation loans. It includes all of the financeable fees with 203K loans, and it also enables you to include any, it's really designed so you can show the borrower how you got to the money. I really advocate always doing a worksheet when you talk to a borrower, and then sharing it with them so they understand how their loan is put together. And then you've been careful to explain it to them. But it's really the only way to calculate the loan amount for an FHA renovation loan with all financeable fees included.
Right. And not just the fees, but really the bids too, because that's what this is all about. Because the 203K loan puts together the opportunity for them to take not only their loan, the cost of the home, or whether they're purchase or a refi, but also those construction costs and build it into one loan. So it takes those as well.
Correct.
Okay, so I'm going to turn the screen over to you. So I am going to,
Request
uh,
it.
yep, you just need to,
Says I can share already. Let's see if I can
yep.
share.
So you should be able to share your screen.
Okay.
Technology, gotta love it. While you're doing that, if you can, everyone type in the chat box or the Q&A, let me know. Um, First of all, if you've done a 203K loan, and I'm seeing, Dennis, you're saying that you cannot hear William. So, William, I think you need to speak up just a little bit, which I know you don't have a problem with that.
I can talk louder. I just
There we go.
trying to be real social and friendly here. We'll shout at you, but on
Give
the
us the voice.
podium.
Okay.
Okay. Can you see
So,
my screen?
yes.
Okay. Then I'm going to go ahead and get started. I'm going to do a purchase scenario first because that's actually more common for most people. And what you're looking at is an Excel version of the Maximum Mortgage Worksheet. It is also available on HUD's website, but it doesn't have all the nice features that this one does, which is the colors and also the borrower's minimum required investment, their down payment, which we show here in section G for the lower 2/3 of your screen, which for some reason HUD took off of the worksheet. But everybody wants to know how much it's going to cost, so we put it back on here. And this has, for me, been over the last 7 years, originating 10 years running the plan, over 15 years. This is the only way that I talk to anybody about a renovation loan. And I made this worksheet years and years ago. We've tweaked it and edited it. I handed it off to my ops manager. She manages all the formulas now, but it's totally formula driven. When you download it, it will come with a yellow line at the very top here above the red that will say enable editing. I actually opened this one so the button's gone, but you will need to enable the editing, click the enable editing button to disappear the yellow line and to activate the formulas. Otherwise, you can't type into the worksheet, and that's just a function of Excel. It's nothing we've done. If you email Excel spreadsheets, they get locked en route, and you have to enable them. So we're going to start at the top. Now I'm going to just go through this as if I was talking to a borrower. So if Ginger called me, Ginger, can I actually get you to pretend like you're a borrower for me?
Absolutely.
Okay, so hi, Mrs. Bell. This is William from Finance of America. How can I help you today? I understand you're looking for a renovation loan.
I am. Absolutely. I want to remodel my kitchen.
Oh, can we do a purchase first?
Oh, I'm sorry. You are doing a purchase. Yes, I want to buy a home that has a very ugly kitchen. How's that?
Okay, and what are you thinking of for purchase price? What are you thinking of offering for this house?
For the house I'm buying is $250,000.
Okay, so you guys will notice I'm talking to her. I'm going to put this in step 2, establishing value, because she gave me the data. I just put it in here for now, okay? And then I will go back to the top while I'm talking to. Before I talk to her, I want to know what she's buying. And Mrs. Bell, how much do you think you're going to have to spend on your renovation for your kitchen for this house that you buy? Is there anything else
Well,
in the kitchen? You want to get everything in, or you just want to do the kitchen, or what would
yeah,
you?
I mean, if there's enough to do the bathroom, there's a bathroom that could use, a little bit of fixing up, but I don't know, how much do I have access to?
Okay, so then for loan officers, this is when you'd actually have to qualify the borrower, right? So I would ask the borrower, since at this point I haven't pulled her credit, I haven't done anything. I just answered the phone and I'm talking to her about what she wants to do. So if she doesn't know how much she can borrow, then I have to back up and qualify her. If she already has been pre-qualified for somebody else, so we're going to assume that you're already pre-qualified with another lender for like 375, but you're not really seeing any houses, and you found a cute little cottage that you think might work. And so that's the scenario I'm going to build, because that's kind of typical. Although when I originated, I didn't require a credit pull to do the worksheet for anybody. I just used their numbers and explained the loan to them.
Perfect. So let's do that.
Okay.
So I just say, you know what, I think, we've had some people come in, give us an idea, and I think we'll be able to do the kitchen and the bathroom for probably like $15,000.
Okay, so we're going to put 15 up here at the top, and you will notice that this auto populates into step one, okay? So the worksheet is set up so you can only type in the fields that are yellow, and wherever it's white, it auto-populates. So 15,000, Mrs. Belvin, you're going to be doing what's called a limited 203K loan, and I'm going to explain that to you. But there's two versions of 203K loans. One is a limited, the other is a standard. Because your cost of your repairs is about $15,000. Are you doing anything structural, or is this just a straight surface recoating remodel?
You know what, I'm not really sure. They if they end up moving any walls, there could be something structural, but probably not. I mean, it's probably just new cabinets, floors, paint, countertop, that kind of stuff.
Okay, so then I would go and I'll say, okay, then just so you know, if you decide to move load-bearing walls, we'll have to change to the standard 203K. But for now, we're going to structure this as a limited 203K loan, which will enable you to, you'll have to find your own contractors, and you can have up to 3 discrete tradespeople working on this project, and they will each get paid 2 draws, one at the front, right after, shortly after closing, and the other after their work is complete. And I'll explain to you how we calculate your loan amount. This is an FHA loan, so it's going to require 3.5% down payment, and we can lend up to the county limit for your area. And I'm going to use my county limit because I don't know what yours is. Okay, that's mine. And for the salespeople on the call, you would normally have filled out the top part of this in your area so it's the same, and then save it as a template. If you lend the areas with different county limits, then you have to change that. But if you lend just in your backyard, your county limit's going to be the same, and you can populate that and just leave it in there.
And William, that's just your standard FHA county mortgage limit. There's nothing different for anything as far as a renovation loan, right?
That's correct. We lend to the county limit. So is it a regular FHA loan? It's basically an FHA loan on steroids to resolve property issues. So I would ask, is the seller an individual, or is it a HUD property that you're
No.
trying? Okay, so it's not a HUD REO, so I'm going to say no. And I know you're buying it, so it's not a property flip. Usually if it was, you wouldn't know if you were just trying to buy it. HUD contract shows, so no, these are all no's. And then there's no credit. HUD regularly gives credit for lead-based paint, asbestos remediation, and sometimes for EPA remediation if they have oil tanks or cold bins or stuff like that. But if you don't have an email that exactly states an amount from the HUD marketing and managing contractor, the answer for line 14 is always 0. Okay? You have to have a specific commitment from HUD for that specific property, a dollar amount that they're willing to contribute. Now, that amount does have to still be included in my top line cost of repairs here. So the borrower still has to get a bid to do that. Right? But I can't, without an amount from HUD, this line is always going to be blank. So you'll notice in here, into the worksheet, you can put in your borrower's name here. So I'm going to put Ginger Bell. Use my address because it's easier. I'd get hers if not. And it tabs to a case number. You will not have a case number on a purchase or a refi. You leave that blank. That's for us. We're assuming a single family unit, so we can click 1. If it's a duplex, you put 2 in there. If it's a triplex, you put 3. Just remember that the county limit changes according to units. So if it's 362 for a single unit in Indiana, it's probably 4 something for a duplex, and more than that for a triplex. Okay, so you have to look that up if you have multiple units. You would put in the subject property address, their state, and their zip code. And then this becomes part of the record for this document.
So, William, I'm going to back you. When you selected the limited 203K and you put yes, then the form automatically put a checkbox under the limited 203K, right?
That is correct.
Okay.
It did 2 things. It puts a checkbox here, which you can see. And then down here on line 36, which is E, where my dollar amount is, it automatically sets that to show an over limit if I go over 35,000.
Perfect. And see, that's the thing that I love about this. And you talked about the auto-populated formulas, which if you go, just so you all know, if you go to the FHA to HUD's website and pull their maximum mortgage worksheet, you're not going to see this. So what William has done is he has hard-coded all of these to be able to populate into these areas, which makes it absolutely awesome.
Cool. So let me show you what I was talking about, the over limit here on line E. Total rehab costs, fees, and reserves. I'm going to bump this up to say 32,000.
Right.
And I'm going to leave this saying yes. And now you see it's over limit. Okay. That means you can't submit this to us as a limited 203K loan.
Nice.
Okay. So you have to go back, reduce the cost of the repairs, and start over. Or you can change this to a standard.
Right.
Right. And that would remove the over limit amount. Okay. So now we're at 38,000, but it's a standard 203K. So we're going to go back and put it back our scenario so you can see that. 15,000. Okay. So Ms. Bell, your loan will, on your initial loan amount, we're going to include the draw inspection fees and title updates and a permit fee, as well as a contingency reserve. So these are all financed into your loan. They're not out of pocket money. They're part of your money, and they're required by HUD. So we are going to disclose at the beginning 3 draw inspections. That's 1 per contractor for $175 each, and 3 title updates at $110 for every draw. So we always will do a title update before we release your money to make sure that there's no mechanical liens on your property. When we pay the contractor, we actually pay you a 2-party check that you can sign and hand to your contractor. And our turn time for getting that check to you is between 5 and 7 days from when I have all the documents I need to process the draw. Okay, so in your loan, we're automatically including the cost of the inspection, which will be done by the appraiser, as well as title updates, which we'll do through a national title company to verify there's no mechanic liens. So that adds another $525 for the inspections and $330 for the title updates. And guys, if you have the access to Zoom, I routinely do this with the customer if I can get them in front of a computer while I'm talking to them. So I'll send them a Zoom invitation, and then I'll take them through the worksheet and explain all this to them. It does 2 things for me. As an originator, it helped me make sure that my customer knew what they were getting into and how the loan worked. And B, if they were still shopping around, they hadn't settled on a lender, I usually got the deal because I'm the only one who explained the worksheet to them.
Right.
Okay? Most guys don't do this.
One of the things too, so next week when I'm doing the FHA expert webinar, I'm going to talk about creating videos and education and things like that, and that's what consumers are looking for. So this would be a great one for you, even if you want to do like what William's doing right here, to do it and record it. And I'll talk about it next week. So make sure and register for next week because I think this is so valuable to be able to provide that expertise. I'm going to stop you for a moment because we have a question from Dennis, and he talked about multi-unit. And so his question is, I'm assuming that at least one of these units must be owner occupied.
That is actually true. This is an FHA loan. We do
Right.
not no investment properties.
And what is the maximum number of dwelling units that the property can have?
An FHA loan, so 4.
Okay, perfect.
1 to 4 unit properties. Okay, we can do these on condos if they are FHA approved condos, but it's only going to be walls in, and we'll have to get the condo association guidelines for what the borrower is responsible for, and that's what we can lend on in an FHA approved condo. All right, so back to the worksheet.
Yep.
Okay, so on your permit fees, we're going to take 1% of whatever the bid amount is as an initial disclosure. So Mrs. Bell, there's probably going to be permit fees for your job, but we're not sure. We won't know until you actually write your purchase agreement and we can investigate with the municipality what permit requirements are in that area. Now, the problem with permits is you can't draw the permit until you own the property because they won't issue it to you. So after your loan closes, either you or your builder will have to go to the assessor's office and the building permits and draw the permits. We're going to finance the cost of the permits so you don't have to be out of pocket for those after the loan closes, unless you don't want to, in which case we won't finance it. Right? So they have that option, but I'll need it in writing. If you say you're going to pay your own permit costs, send me an email that tells me that. And then I'll have to have it in the file for the auditor because I have to disclose something that's a normal customary part of the transaction. So,
yeah, and I honestly, I just wouldn't even recommend doing that. I would just make it a normal part because the thing of it is if they don't use it, they get access to it again anyway.
perfect.
So that's just my recommendation. I always hate leaving that, by the way, you have to do this kind of thing.
Okay, that works for me. All right, so then we also are financing a 10. Do you know the property condition? Your loan has to have a contingency reserve, and it sort of depends on the condition. Have you seen this house that you're thinking about buying?
Yes.
Do you know if the lights, electric, and gas are working?
Yeah, it seemed to be.
Okay, so if they're working, you have a 10% contingency reserve, which in this case will be $1,500. And this reserve on this loan is a health and safety net that HUD requires, but you can only use it for things that are health and safety related. So at the end of your construction period, after your kitchen and your bathrooms are complete, if this money, $1,500, is still left, we're going to apply it to your principal as a principal reduction. Okay, so you won't be able to do anything else with it. It is really just a safety net. And just so you guys know, this is a small amount, most people are okay with that. If you're doing a standard 203K loan, and say your cost of repairs is $200,000 and it's a 15% reserve because the house is empty, it's a big amount, okay? And so at that point, I ask them, well, so it's not, that's kind of over the top. When it gets closer to $3,000, so if I made this, let's make this 28,000.
And I think that's the thing. So the 10% is based on the total repair budget.
Right. Well, it's based on this number, on the cost of repairs. It's 10% of whatever the contractor's bid is.
Right.
Right. So if it's 15% because the utilities aren't working, so now it's like 4,200. They're still doing a limited, but at 4,200, I would be asking the borrower, I would explain to them that they cannot use this $4,200 unless it's for health and safety things. So if they think they want to have some time to think about it, and maybe at the end of their project do an extra room or do a deck or something, then they need to switch to a standard 203K loan, because that loan lets them use all of the contingency reserve. Whereas the limited only allows them to use it for health and safety things that come up during the course of construction. So they can't upgrade, add to their project once it's approved. Okay, so that's kind of a critical example for you guys, because I manage the op center and the draw center, and it is a heartbreaking conversation for me to have with a homeowner who thought she had an extra $4,000 to use, and she may have spent it already, only to find out that I can't release those funds for what she did because it's outside of the product guidelines.
And that's on the limited. So limited, it can only be used for health, safety, and soundness,
Right.
or principal reduction.
Right.
But under the standard, then if it gets over, the threshold of what, like $2,000, $1,500, something like that.
Okay with about $1,500, $2,000. They're okay with that as a principal abatement. $3,000, $4,000. Most people wish they would have known that they had another option. Right. So like I could still close this as a limited because it's under 35,000, but I would have this conversation with my customer before I did that, because this is the time to change it to a standard and then give them the option of considering using this 4,200. They may not even use it, but at least they have the option, because once it's closed, my hands are tied.
Perfect.
Okay. So we're going to drop this back to our 15,000. Which gets us back into a normal size limited. Okay. So we're going to knock this back to 10% because she said the mechanicals are functioning. If you don't know, disclose 15% on your initial disclosure. So if there's because you can always make the number smaller, right? So we're going to go 15 because it's a purchase and we think they're on, but we'll wait until the appraiser tells us. And that way, when we redisclose, her loan amount is going down. People like that a lot better than when it's going up. So you'll notice we maximum disclose automatically auto-populates 3 inspections and 3 title updates. The worksheet does that automatically because your initial disclosure is the worst case scenario with all the known parameters. All right, and then so that gets us to a total cost, Mrs. Bell, of $18,255 for your renovation, which includes your finance inspection fees and title update fees and permit fees, plus a contingency reserve of $2,250, which will be used for health and safety or livability issues and stuff that comes up. Okay, so then now we're moving into establishing the value.
Okay, and before you move on, we have a question. At what circumstance or condition does that move to a 20% contingency?
It's really rare on a limited that it goes to 20%. It only comes into play really on standards when either the HUD consultant doesn't feel comfortable, or it might be on a limited if they're doing if there's an unknown issue with the plumbing, and I'm not really sure that we have enough money. So it's either going to be me, my underwriter, or the HUD consultant that bumps it to 20%. Okay. And the reason we would do it on a small loan like this is if we had some unknown about some of the mechanical systems, in which case we'd be trying to have as much money in the pot as possible to address something with the gas or something with the electrical. It's usually plumbing, but it could be gas, electric, or plumbing. So that's when the 20 comes into play. It's almost seldom used. It's almost always 10 or 15. I have had one borrower ask for a 20% reserve because they weren't sure about the property condition.
Yeah, makes sense. I mean, why not get it wrapped into the loan while you can? And Scott's saying, okay, will he go over this on a standard? So is it different on the standard? I mean, this worksheet works for both the 203K limited and the 203K standard. It's the same worksheet, right?
The same worksheet. So on the standard, I'll show you what's different. Let's see here. Let's say no. Okay, so when you notice what's different is we have some more fee lines populating here. So my architectural engineering fees, I can put that in there. So I had to pay for drawings, plans, and specs. Maybe there's $7,000. The borrower usually has already paid the architect, but if they want to recover their $7,000 because it is their house, it's involved in the house, we could finance it if they could afford it, and we could reimburse them what they paid the architect. They would get a check on the first draw for whatever they spent for the architect or the engineer. Okay?
Right.
They can also finance, you'll notice 203K consultant fees popped in at $500. This is a fee that the HUD consultant's paid at the door when he shows up to do his initial inspection. If the borrower wants to recover that $500, they could finance it on the worksheet, and you see the worksheet automatically populates. We built in the field, so you don't have to worry about how much the consultant charges. Just build your scenario in the worksheet, it shows up because it's a grid that HUD uses, and we just put that into the worksheet. It's also available on the website and on the 4000.1 if you want the grid, but it might be in our product guidelines as well. But the worksheet drops in what the amount should be based on the size of the project. So those are the things that are different. The other thing that you notice, this went from 3 to 5 because they can have up to 5 inspections. They only get one general contractor, but they can have up to 5 inspections. 5 draws. So that's 5 inspections. We disclose the worst case scenario. So, and I've never had a consultant collect the full 350. That's the most that HUD allows to be billed. So that's what we disclose on the initial disclosure. When the contractor comes back and says, I only need 4 draws, I only need 4 draws, and the consultant says, I only charge $200 per draw, then we change those numbers to 4 and 200. Right? But in the initial disclosure, it's the worst case scenario, maximum amount is what we're showing the customer. What else populated in here is financeable mortgage payment reserves. On a standard 203K loan, if the borrower can afford it and the property requires it, HUD allows us to finance up to 6 months of their full principal, interest, taxes, and insurance payment. Their full pity payment goes in here. However many months it is, say 4 months, and then we pay it from servicing against to their account, from their escrow to their account every month, so it's on time. And then they pick up at the end of, if they do 4 months, then we will start on the first day of the month following their closing, and do 4 months, and then they're responsible for month 5. So that's what changes, and that's automatic, and that's all tied to this switch up here, yes or no. So when I click it back to a limited, you'll notice these are all grayed out. Okay, so there's nothing happening here. You can see them, so they're there, but they're not a part of this transaction. Does that work for answering the question on the standard?
I think so. Scott, let me know if you have any other questions on that.
Okay. All right. So we're in here, purchase price. We know what she's planning on offering, $250.
Oh, he said nope. Hold on. We're going to back up.
Okay.
So his question was, on the standard 203K, are we able to pick the HUD consultant, or is it picked like ordering an appraisal? Oh, okay.
So the HUD consultant is managed by my ops center because I'm responsible for the guys. So please don't pick them. If you guys have HUD consultants that you would like us to use in your area, send me their names. I'd be happy to screen them and talk to them and make sure that they can provide service levels that we find acceptable for our customers. And then we assign them. Don't send the borrower to find their own HUD consultant. It's totally contrary to guidelines and generally derails the process. So if you want to have a good, smooth experience, try and follow the process that we laid out because it actually works really well. All right. So, and the other problem with having them send to get to the HUD consultant is that they could engage the HUD consultant before they had an underwriting commitment. And if I spent $1,000 on a HUD consultant's work write-up, and my loan got denied for credit issues because of something with my income, I'd be wondering why you had me do that. So our process is to order the HUD consultant after we get a conditional commitment and after we've spoken to the borrower to make sure that they know that they're going to start spending money. Okay, so that's how the HUD consultant works. Other questions on that?
Okay, he's good to go.
Okay, cool. All right, good questions. So back to establishing value. This next line where there could be something, and I've never seen anything there, is an inducement to purchase. And this is a true inducement to purchase. This isn't the seller's 6% contribution. Okay, this is William. Well, this could be if I wanted to give 10%, so there'd be 4% in there. Or it could be like, William, if you buy my house, I'll leave my 68 Corvette in the garage with the title and the keys on the seat. It comes with the house. It looks really good in that garage. So if you did that, I'd have to subtract that $12,000 or $15,000 of the value of the car from the purchase price. So it's a true inducement to purchase. Very, very rare. Okay?
Yeah.
Very rare. Especially in today's market economy. Like, nobody has to bribe people to buy their houses.
Sometimes it happens. Like I was in San Francisco, and a couple years ago we were looking at a condo.
Mhm.
And they actually, they had a little Fiat that came with the purchase of the condo because the parking space
Only fit
was
the car.
so small, yeah, that it could only fit that one car. So, if you would have gone, then that would have been an inducement to purchase.
That's a good example. I'm going to use that more than the Corvette. So I'll use that one next time. All right, so there's this line's blank. So now we have our purchase price, auto-populates, adjusted as-is value. On a purchase, HUD allows us to use the contract price for the as-is value unless I have an existing appraisal. I would only have an existing appraisal if the property had been appraised already for a 203B and it failed the appraisal. Then I'm going to use that value for this number. Or it might have been a VA or a conventional loan that was appraised but didn't meet, they couldn't close it. Okay, so generally it's going to be the sales contract price. After improved, so Mrs. Bell, you're going to buy this house for $250. You're going to put about 17, let's just round to 20,000 in it. So what's it going to be worth when you're done? Is it going to be worth 270 or 280, or what do you think it's going to be worth when you're done fixing it up?
Well, I should hope the 270. I mean, at this point it's speculation, but they're actually going to get that when it all comes down to it off of, everything at the end of the day, right?
Right. So because we're always, on 203K loans, we're always ordering an as completed value appraisal. So we're comping it the way it's going to be, not the way
Right.
that it is.
So when you're filling this worksheet out, guys, and William's doing this as a conversation for you to go through on the initial. And, part of that conversation is, we're going to go through the numbers right now. And, obviously these numbers could change. And so, it's important to let them know that, because you're not going to really know that after. I mean, I'm going to tell you it's going to be worth $300,000 because I am incredible at designing, because I watch all the, shows on TV. And it may, be worth, it's going to be worth usually what they put into it on the appraisal. That's pretty standard, right?
Yeah, that's pretty standard. So the most important thing on this number is for you guys as salespeople to not tell the borrower what it's going to appraise for.
Right.
Because when it comes in low and the deal falls apart, guess what? It's totally your fault.
Yeah. Hey, William, pop closer to your mic, please.
Pop closer to my mic. I'm sorry. I think I stepped back. All right. So it's totally your fault when you tell them what the value is going to be and it doesn't appraise. So I always make them tell me. You tell me, Ginger, what do you think it's going to be worth? I don't know. They always look up to the left corner of the room. Just wait until she comes up with a number. So, and usually they'll come by with the number of total acquisition, purchase plus repairs. So we'll go with that number. And sometimes people will go more because they've been shopping and they've seen other houses. But wherever they get the number from, it doesn't really matter as long as it's their number and you're not supplying it for them. All right, so that completes this section. You notice when I put that in, or all these other things flowed in, all right? So to go over calculating the maximum mortgage, here's our 267,505, right? And that is the total of this plus that, okay? 2E plus 1E, that's right here, or 2E's right here, okay? So this plus that equals that. And then it pops in an after improved value times 110% for 100% for condominiums, which is 297,000. So this here's what this actually really means. It means if I use that $297,000 to calculate their loan amount, they are underwater when their loan closes. Okay? They're at least 7 to 10% upside down. We only do that for really sturdy borrowers, the borrowers that have assets, they have income we didn't calculate, they have other reserves, they have like they're in a place where if they had to come up with several $1,000s to sell their house, they could do that. First-time home buyer, very minimal savings. We're not going to go to the 297 number. It's a poor underwriting choice for them. Okay, but that's what that number actually means. So you need to put that in the back of your brain. It doesn't apply to everybody, and ultimately it's up to my DE. So, but HUD says you can do that, which nobody else does. But HUD is willing to say, well, you could close them 10% upside down if you want. That means they're stuck in their house. Okay, that's what that number really means. If there's a lead-based paying credit, it would populate in here from up here. There isn't one, so that's blank. And then, so my loan amount is going to be the lesser of 3A, which is the all-in acquisition, or this 110%. It's always the lesser of, right? And so here's the mortgage amount, 258,142. Here's my county limit. And what you'll see if this number 258,142 is over, say it came out because I had another $110,000 into my repairs and it was a standard, it would show the base mortgage amount, it would be the county limit, and then they have to bring everything above the county limit. Okay, that happens once in a while, but not usually. So just to let you know, the worksheet will calculate what their mortgage will be. Here's their eligibility factor. Here's their down payment. This is just the 3.5%. Whatever costs you have, closing costs, prepaids, etc., you'll have to add that off the worksheet, but that gives you your 3.5% of this transaction. Okay, that's the basic part of the worksheet. You'll use that over and over and over and over. Energy efficient mortgages or solar or wind energy have never come through my ops center on the worksheet. Have not done any of those kind of mortgages. I'm open for it. Haven't seen any. Okay, if you guys get an energy efficient mortgage, just reach out to your account exec and we'll get you a special tutorial for your situation to go through it. I don't explain it to people anymore because nobody ever sees it and it just muddies the waters. But it does allow, the 203K does allow people to do an energy efficient mortgage, solar, wind energy, or geothermal.
Well, an EEM can it also be like appliances and things like that? Can they use the energy efficient mortgage for things like that?
No, it's
Not
hard.
really.
They're talking specifically about energy enhancements to the property.
Gotcha.
And I'm not even a fan of it. Like HUD's been promoting it for a decade. It's expensive. You have to get a home energy rating system report, which nobody can read. And all it tells you is that you will save money on your utilities. So I'm saying just do a limited 203K, insulate your house, change your windows, buy more efficient appliances, turn the lights off when you're not using them. You'll save more money on your.
Gotcha. There you go. Good advice. Advice from William.
Okay. All right. So then we find out here at the bottom, it calculates the MIP, what that factor is. And this is just a recap of the transaction. So here's the total rehab cost. We're not having energy efficient, nothing solar. Here's your total rehab cost. There's initial draw at closing. This worksheet just show that. I don't know why it doesn't show that.
So your initial draw, so let's talk about the difference on that, because on the limited they get 2 draws, and that's 2 draws per contractor. So if they have 3 contractors, say that I'm doing this job, I'm going to be the general on it, and I'm going to hire one guy that's going to do the counters, one guy that's going to do the flooring, and one guy that's going to do the countertops. And so I've got the cost for all of those put together, fits into the $15,000. So when I fund my loan, then you're going to send me, Finance of America is going to send to the borrower 3 separate 2-party checks that are made out to me and to each contractor individually. And then it's my job to give each one of those contractors the checks, right?
That's correct. And it'll be half of the bid amount.
And they get half. So they get half up front, and then they get the other half when all of the work is done. So the person that, does.
We don't do that here.
Oh, you don't do that? Okay.
We pay them as they finish. That's why we do three title updates and 3 inspections.
Okay.
So yeah, some people used to do that and it just drove the guys crazy.
Right. So guys, that is so I mean, if you walk away from nothing else today from attending this webinar, I want you to walk away with this. That is huge, William, because
It is.
and for me, I didn't know that at the end because it has always been, and I've been doing training on 203K for, several
Right.
years. And for Finance of America to do that as a lender and to actually pay each one of those contractors off when they're done with their work is a huge thing, and a huge thing for you to use to get the business,
Right.
because most lenders don't do that. And in fact, I don't know of any that do that, quite honestly.
Yeah.
So I
I
think
are
that is huge.
because I are a finished carpenter and my uncle was a bricklayer, and I know guys that do HVAC, and he's done in 2 days.
Yeah, right.
3 days if he puts ductwork in. And when you tell him he's got to wait 6 weeks for the cabinets to come in, he's going to court.
Yeah, yeah. So I think that's incredible. Okay, but again, a two-party check. So when that's done, then borrower needs to, and these are all things, and guys, let us know what you need to know. This is part of the process. William has a great training that's online at FAMU. You can go through it. It's going to explain all of this as well. But kind of putting those steps together, I think, would be good to know.
And you can tell your borrowers, like, we manage the draws. Those people report to me. It's part of our operations center. They're good at it. They're conscientious. We don't do anything. We don't make the contractor jump through any special hoops to get his money. We're going to need an inspection from the appraiser that says the work is done. We're going to get a letter from the borrower that signs off and says the work is done. I like it. We're going to get a title update that shows that there's no liens connected with the job or that particular contractor. And then we're going to send the check. It's real straightforward. We use FedEx. We do next day. So we always verify with the borrower where to send the check to. We have tracking. It goes from our accounting, which is in Horsham, Pennsylvania. They take draw requests up to about 4 o'clock in the afternoon, and they go out the same day. So it's really, we get those three docs together. I give my escrow admins a day to process them just because they've got a lot of files to manage. But it's not more than a day that we have the docs before we requested the draw and the check is in route.
All right, and then it goes to the borrower.
Goes to the borrower, and we verify where we're sending it to. If they haven't
Right.
moved to the house or they're living somewhere else, we have the capacity to send them directly to the contractor to wire to their account or something, or make a one part. We can't make one party checks because our system doesn't do that. But we could wire it to the contractor, but then we get a release for each draw from the borrower signing off on the amount that we're wiring to the contractor to verify that they authorize us to do that payment.
Okay. Good.
Okay. So that's the worksheet. I mean, that's pretty much
Nice.
it. And if you print this and share it with your borrower as a PDF, they would be very enlightened. You put your marketing all over it, make sure their name's on it, but it just helps them understand what's in the money and how the deal goes together. Because a lot of times people don't know anybody else that's doing a 203K loan. And I lost a deal once because I didn't explain it very well like I did today. And by the time the guy went home on Friday and had a couple beers with his brothers and his buddies, he came back on Monday and he said, "We think this is a scam. I don't want to do it."
Because
So
sometimes it is too good to be true. So,
yeah.
and guys, as you're getting questions, so one question in is looking at DTI, and say you have a multi-unit property. So borrower has one unit, they're going to be renting out the other unit. Are you using both the borrower's income and the rental income that's expected from the other dwelling units in order to qualify them?
Yeah, we use HUD's calculation for that. This is an FHA loan, so you could look in the 4000.1 on rental using rental income. That's what we do. It's going to be dependent on the appraiser's estimate. The appraiser's going to tell us what the average rents are in that area. I think the factor is 75% of that is what we can count for income. But we just follow HUD guidelines on that.
Nice. Okay, and any other questions that you have, please type them in there. If you do have questions that come up, because I know after I listen to a webinar, learn something new, I'm always like, oh my gosh, what about this? Guys, you have fantastic account executives at Finance of America who can, answer your questions. They can get in touch with William. William's team is phenomenal. And so just reach out to them as well. So I am going to go and close this out. I'm not seeing any other questions right now. coming in. If you think of anything, please just type them in there. Otherwise, I want to let you know we do have all these resources that are available in FAMU. So if you are not signed up for FAMU, which is the Finance of America University, then talk to your Finance of America account executive. They can get you a login, and we have the 203K certification there. Any webinars that we've done, they're all in there. We've done a lot of webinars on the renovation loan program, so those are in there. And there's also a variety of resources like flyers and presentations and things you can use. So make sure and get registered for that. And then sign up for the webinar that I'm doing next week. It's FHA Expertise, Educating, Marketing, and Building Your FHA Business. And guys, I'm going to share with you really how to take what this is, whether you want to market as far as the 203K loans, if you want to market about FHA, VA. I'm going to share with you my tips and what I use in building education and marketing. And so, strategies, what to do for videos, if you want to create your own online university. I mean, there's so much you can do. And honestly, the renovation loan is a great program to start with. I helped a friend of mine build a renovation website several years ago, probably about 8 years ago. And he still, to this day, gets over 300 leads a month off of that. And probably less than 5% of those leads actually end up going renovation. Sorry, William. But it's people are looking for information in line. So hop on to famuevents.com, register for the upcoming webinar. I'm going to send you a link, a follow-up link that's going to have the Maximum Mortgage Worksheet that William went through. And I want to thank you all for joining us, and I will see you all next week. William, thank you so much for your expertise. I look forward to doing another webinar with you.
Thank you, Ginger. It was a pleasure.
Okay, take care, guys. We'll talk to you soon.
Bye.
Bye.